Well, it is interesting to me that we've had 2 consecutive quarters of declining GDP, but in the third quarter, the current reading of the GDP tracker from the Atlanta Fed is plus 2.6%, plus 2.6. Now, I don't think that plus can last. We'll ask expert Art Laffer in a second, but it could be that we're heading for a double-dip recession, which is an interesting concept. I don't know. I made it up this morning on Stu Varney's show, but it is, I mean, there's something to it. Anyway, we have my great pal, Art Laffer, former Reagan economist, Presidential Medal of Freedom recipient, and author of Taxes Have Consequences, available in a couple of weeks, September 27th. Art, what do you make of this? I want to get to inflation also, but the GDP tracker from the Atlanta Fed, I mean, they're not always right, and they do change when new information comes in. But the August jobs report wasn't bad. So I'm just wondering, could we have 2 negative quarters constituting a recession, 1 positive quarter, and then go back into negative quarters, let's say in the fourth quarter, and then into next year? Is that possible? Double dip?
It surely is possible, but I'm not one to challenge the Atlanta Fed on their estimation. I mean, they've been modestly good for quite a while.
Yeah.
I mean, they've obviously revised them as more and more information comes in, but I sure as heck can't improve on their stuff. They're amazing.
So having said that, is it possible then, and this is really a broader economic question, that you go back into negative territory, let's say in the fourth quarter? Their numbers just for the third quarter, based basically on the July data. August data coming in. We got the jobs report last Friday. So can you go back down into a negative quarter, let's say in Q4, maybe extending into negative quarters in the first half of next year? Is that possible?
Of course it's possible. If you look at this economy is not in good shape, Larry. I mean, I call it a secular decline, not a recession. I think we're really in very low growth period for as far as the eye can see. It's just very saddening to me to see how these policies have just crushed the growth of the economy and the provision of prosperity.
So I want to go to the inflation front, Art. We got a couple of charts. I don't know if you can see them from where you are or not. But commodity prices have come off, and gold has come down. Also, the dollar is very strong. King Dollar is sitting back on her throne. Yeah, that chart doesn't do it complete justice, but you can see commodity prices have come off. And the dollar is very strong. In fact, the dollar is so strong now that it's killing the euro and the pound. We're almost at 1 to 1 to 1. Which is a very odd place to be. Yeah. Does that mean inflation pressures are abating? I might add, for what it's worth, the M2 money supply has slowed quite a lot from about 27% a year and a half ago to something like 5 or 6%. In your judgment, Art, will inflation be easing down?
Yeah, let me just say I do disagree with you on the dollar being very, very strong. Against foreign currencies, Larry, you're completely correct. It is. But against goods and services, it is not. And when you look at the monetary base, let's say monetary base to GDP, you see that number has been very, very high, Larry, and it's got a lot of catch-up coming to it. What I think you're seeing is a decline into a recession or downturn or even a more rapid secular decline. And spot commodity prices, you get all sorts of things like oil and like lumber and like these other commodities have dipped sharply. That will reduce inflation. But the thing that's amazed me, Larry, is these last 2 numbers, and the one I'm expecting, by the way, is one of the last 2, is that even with that sharp decline in oil prices and other spot commodity prices, the inflation number for that month was only 0. In other words, all this other stuff is taking off that it barely offset the other stuff. Now, this next month, I'm expecting something like a little less than 2% inflation, but that's still with a lot of decline in these prices. Once those prices hit the bottom, which they will fairly shortly, then you're going to see a jump back of inflation. I think inflation range is maybe 5 to 7, 5 to 8%. I mean, we've had a huge run up in oil and food prices and all that. That caused it to be way above where it should be. But now this has brought it down below, and I think we've got a steady base of inflation, 4 to 7%, that just is not leaving. I mean, especially the shelter one is just going boom, 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 boom. New housing starts are down. People are trying to rent more properties. Mortgage rates are going up, so the cost of holding homes is increasing. It's a very serious inflation situation, my view.
And based on 4 to 7%, so that's like 2 to 3 times the Fed's target, which is only 2%.
Exactly.
And you make a good point. The monetary,
and it's rising.
Yeah, well, the monetary base, which they now call the balance sheet, they really haven't. That doesn't start curbing until this month, September. This is when they start running off. They haven't really done hardly any, maybe a minuscule amount.
Well, they say.
So there's a lot of cash in the economy sloshing around.
You better believe it. And we're going to catch up with that cash, Larry. It's not the rate of growth that matters. It's the level of money versus GDP. It may take a while for inflation to bring that back up into balance, but that's what has to be brought into balance, not growth rates. Growth rates are a mistake. Its prices are determined by the stock of money and the level of output. And it takes a while to get that in balance, but it's catching up right now.
All right, that's an important point. The stock of money and the level of output, more important than the rate of change. Thank you. So all this spending, I mean, there's a story in the paper today, they're going to get the $50 billion out right away for the bailout of chip companies. But you had 280 some odd billion. You had in the chip bailout. The student loan bailout, I don't know, the estimates now go from 500 billion to 1 trillion. Lord knows. And then the Inflation Reduction Act, which is inflation increasing, that's about 800 billion. I'm just saying it's $1.5 trillion. My arithmetic doesn't go higher than that. When does that stuff kick in? I mean, that's more government spending. Isn't that more aggregate demand?
Well, let me, if I can, just put it in conceptual perspective. If I gave a person $1 million, just here's a gift, $1 million, that person would shout his friends a beer. He'd do that, and he'd take a week off, maybe a couple of months off, maybe take a year off. You know, what happens when you give a transfer payment like this, student loan forgiveness, you get people to stop working, they work less, and they spend more. That's the first thing that happens. That's the income effect of a transfer. That's exactly what happens. Also, by taking those goods and services away from other people, of the workers and producers, they're going to produce less as well. So the first thing that happens from a transfer payment is, number one, all people work less. It's the transfer theorem, and they spend more. The transfer recipients spend more, which is more demand, less supply, which by itself leads to inflation. But then it leads to an increase in the monetary base, which gives it the financial wherewithal to accommodate that type of inflation. So that's where all of these programs have led and are leading. And I just don't see anything out there, Larry, that tells me the inflation story's over. It's just plain not. We've got plenty of monetary base around, we've got plenty of demand around, and we've got very little supply around. That adds up to inflation to me.
Wow. You know, that's really important. That's the income effect and the supply effect. That's very important. That's what they're doing. And there's nothing better in sight. I got Congressman Kevin Brady coming up. I'm going to ask him about that. I think you're 100% right. Anyway, Art Laffer, great stuff. Really, thank you very much. All right, folks.